All right, I get a lot of questions on YouTube during the live streams, and I don't have a lot of time to answer all of your questions. So I said last night, if you wanted to post here and ask some questions, I would answer your questions. So here we are. We're going to answer all of these questions that people had last night. Looks like Felipe got really excited and asked a lot of questions. Felipe, I said one question, not 5 questions. Here we go. Allison said, what is your favorite time to trade and your favorite setup? Well, I think we all already know that 15-minute opening range, baby. We love it. It's kind of like my go-to setup right now. I try to focus on the first hour or so. So obviously the market opens at 9:30, 10 o'clock, 10:30. By 11 o'clock, I like to walk away. And, normally that's kind of like my favorite time to trade, my best time to trade when you look at the overall results. Trading between 9:30 till about 11 is kind of like my go-to, and then obviously that 15-minute range breakout setup, like right here, 10 o'clock, we push, bang, 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 and that's kind of like my favorite setup, so pretty easy. 9:30 to 11, looking for that opening range breakout the first 15 minutes, and that's actually the 2-minute chart, but yeah, you can see breaking out there. Pretty much like my go-to setup there. The next question, I'm only going to answer one of these because this guy got like 5 questions in here, and I don't know what he thought. He said, how do you balance when to be passive and when to be aggressive? I assume you rely on discretion more than a mechanical system, so how do you know when to be aggressive and when to stay completely out? Well, good question, good question. I think your best thing to do is look at the higher time frames, kind of come up with an idea of where's the market heading, right? Like, where can the market go? Are we consolidating? Are we breaking out? When we're breaking out and we're showing momentum, there's a trend and all that stuff's happening, like when we're going, that's when I want to be aggressive. That's when I want to be trading. That's when I want to get in. I want to get out. Like you can see here, like on Thursday, that just bang, 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 push, push, push. Like, I want to be trading during this, and then I want to avoid, basically, when we're going sideways. So if the market's going sideways, like in a range there, I want to avoid that. I want to wait for that kind of next breakout or breakdown of that range. So I wouldn't say it's like the end-all, be-all kind of idea here, but the real lesson of the story is, if the market's going pretty much like ding, 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 stuck in a range, it's not really making a move, it doesn't really have that push or that pull or the drop or, momentum, that's when I want to try to avoid it. If I look at the 15-minute chart, and let's say on the 15-minute chart, we got a lot of candles just kind of stacking up here. Like a lot of these candles are overlapping. That normally means that we're going sideways. So a good little lesson. Take a look at that 15-minute chart. Find out, are we in a range? Is the 15-minute candles, are we making new highs? Are we making new lows? Are we breaking? Like you can see here, we pushed off of the previous day closed, started pushing, pushing, pushing. Each one of these 15-minute candles is making a new high, making a new high, making a new high, and pushing. Even on this pullback here, it's like, okay, new low, we're pulling back. But inside of here, you can see how we're basically just like stuck inside of that range. So try to avoid the range. Remember, the market basically makes a big move, right? It'll make a big move, and then it consolidates. Normally, when the market makes like a big move the day before, normally the next price action type of day will end up being kind of consolidation, because remember, the market moves in waves. So, if the market moves up, it's like, okay, we pull back, we kind of consolidate, we move up again, we consolidate. And then that's kind of how the trend works. The market basically moves in waves. Wow, right? Really, really groundbreaking info here. I know. I try to keep it simple. Some guy said, growing plants, yes. Do you have a moment in your trading career you'd like to highlight? Something like a turning point, a harsh lesson, difficult pill to swallow, generally something you consider you had a major impact on your career. Ugh, that's a big one. I always tell people that at the end of the day, the market is always going to be here, right? It's not going anywhere. The market's been trading for, how many years now? So it's not a race. That you don't have to make all of your money in one day. And if you think about it, like, it's very kind of a simple idea that you can lose all of your money in one day, right? Like if you have a $20,000, $30,000 account, you can lose that in one day, no problem. But the chance of you turning $30,000 into $1 million in just one day, I'd say it's almost impossible, right? Like it's very, very, almost impossible. 99.9% like impossible that you'll ever make $1 million, just putting on one trade with like a $30,000 account. So that's like kind of that light bulb moment that I think as a trader, everybody has to experience. That moment where you're like, hey, $1,000 every day, it adds up, it grows my account. But if I get greedy, if I try to get crazy and I go oversized, or I don't follow the plan, I don't follow the rules, well, I can lose my account very quickly. So keep that in mind. You're not going to get rich overnight. Trading is not a overnight get rich scheme. Trading is a long-term marathon of just doing something consistently for a very kind of long time. It's almost like madness, right? Like we know that the odds are stacked against us, but we still do it, right? We still show up every day, and that's the biggest thing, right? Consistency, showing up every day, putting in the work, and just kind of being realistic. If you're realistic, I think trading can be, a profitable business. But if you treat trading like you're just going and betting on black or betting on red at the casino, the chances of getting rich are very slim, and it's not going to happen fast. I've been trading for 8 years now, and I still struggle, ups and downs. Like, it never ends. Like, there's not a point where you're like, oh my God, I no longer lose. Oh my God, I no longer have red days. Oh my God, I'm now just going to make so much money for the rest of my life. No, it is a constant up and down battle. The emotions are real. People don't lose money because they don't know how to trade. They lose money because of emotions. They go on tilt. They break the rules. They don't cut off a loser, whatever it is. Like, that's why we lose money. We don't lose money because of a strategy. We lose money because of that kind of FOMO and that mental, that emotional kind of, issues that we have with trading. So this guy got 2 questions. He goes, how do you find a good take profit, especially on a 2-minute flag? And then things that help avoid bad flag setups. All right. That's a good one. We'll kind of combine those 2 questions because, well, we might as well. Let's take a look here. I'm trying to find. Let's look. Here we go. Look at this day here. All right. So we had kind of that 15-minute range breakout there, just to highlight that. We broke out 15-minute range, like right there, to the upside. And we can see that we had a little bit of a flag set up here. So for me, what I'm looking for is I'm looking for the first candle to make a new high when we're pushing through. So the first thing that we saw is that we broke above this high, right? We know that's resistance there. So I'm like, if we break above this, if we break above this high and also like this resistance, what would that mean? Well, it'd be very bullish, right? We break above that. We then pull back. We kind of retested a little bit into here. We built out that flag. We take the first candle to make a new high. So the 93, the high was 94.25. The high on that candle was 04. The high on that candle was 05. So you're waiting for a pullback. We got the 9 EMA. We got the 21 EMA. And then bam, we are then kind of riding that higher. You can see from the 20,000s all the way up there to the 20,120s. And that basically just rode the 21 EMA or the 9 EMA all the way to the upside there. So that's kind of what I'm looking for. If I'm looking for targets, I want to see like this, right? Okay, the high of that candle was 35. That's the overnight high. If you look at the bigger time frame, you see obviously like a wick there. So when I see that there's overnight high at that 35, if I'm long from the 85s here, from the 96s, my target's going to be right across there, which you can see we ended up pushing up to. We pulled back, kind of bull flagged, and then continued higher from there. So that's like, a 40, 50-point move potential up to those overnight highs. That's where I look for my targets. Same thing. Let's say if I'm getting short, if I'm getting short here, let's say like there's a bear flag, kind of like right there. We get short, okay. There's my target, kind of that previous breakout level, maybe previous lows of those candles, kind of pushing into that. So we're just looking to the left. If I'm short here, I'm like, okay, we broke out here, so that would make sense to kind of pull back and then retest that level there. And that's pretty much all we're looking at, right? We're looking at the higher time frames for targets here. If I go and I look, I'm like, okay, if we break out here, where's my target? My target's right there, that previous day high. Previous day high, previous day low, previous, areas of resistance. I'm kind of looking like, okay, bang, bang. That's where I'm looking for targets. I think that's pretty much like the easiest way to sum up the idea of where I'm looking for my targets and all that, kind of fun stuff there. Now, when I talk about like how to avoid those bad flag setups, that really goes back to the consolidation theory, right? Like if we're chopping around, the market's not going anywhere and we're just chopping, like in a range here. Well, I really want to wait for the market to break out of that range before taking a flag setup. If we're just kind of stuck, ding, 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 we're not going anywhere, I'm like, okay, I want to see us break above the highs here. So like 40 area, we talked about this yesterday on the live stream actually. So break above those highs, then put in a flag, and then we push to the previous high of day. That would be my overall kind of thought process to avoid those bad flags, to avoid entering a trade that doesn't work out. Obviously, you never know if it's going to work out or not, but you can identify momentum. If the momentum is not strong, it's not pushing, we're not getting a breakout, like the market's kind of chopping around, well, then I want to avoid that, right? If there's just a lot of chop and we're stuck in a range, anytime we're in a range, it's basically like, hey, avoid that, break out of the range, then look for an opportunity. We did break out here, pulled back, tested it. So it's really just kind of, again, looking at that higher time frame. Kind of talked about this just in the last couple questions, but like if you look, let's say 15-minute chart, and you look at the 15-minute chart, and a lot of the 15-minute candles are just basically overlapping each other, right? They're just overlapping in this area. Well, I want to avoid kind of buying a breakout. It did a little fake out right there at 11:15, which kind of, is how it goes as well, but just really be patient. If the market's going sideways, it's pretty obvious when it is because all those candles are just basically overlapping in a range. Like ding, look at this. Like this right here, you're like, ew, stay out of that. And then you can see the difference when we're trending and we're looking good. It's like, hey, we're making new highs, and we're pushing up there. So avoid the range. If the market's going sideways, that's where you do not want to be trading. You don't want to be trading in that sideways market trying to trade momentum because there's no momentum. Also, like if you look the 2-minute chart, if the EMAs are like all chopped up and really like not pointed in a good direction, it's also something to think about. Like, hey, we're chopping there and I want to avoid that area. So next question. I get this question all the time. How long did it take you before you're profitable and when you started feeling very close? I don't know. I still sometimes feel like I'm not profitable, honestly. Like after 8 years of trading, you have those red days and you're like, how did this happen? Why did I do that? But that's just emotion. That's the battle that we all have to face as traders. And if I sat here and told you that there was like that one moment where I was like, oh my God, I'm now profitable, everything's perfect. I mean, it doesn't really matter because I can be profitable for an entire month, right? Like I can make $100,000 in 1 month, and then the very next month I can lose $300,000. So there really isn't like a moment where traders just wake up and go, oh my God, I'm profitable. It's a continuous battle to protecting your profits, to locking in profits, to following the plan, having your kind of setups, and really forcing yourself to stick to the plan. And I don't think there's any secret to being like, oh my God, this is what I did to be profitable, because every trader is a little different, right? Some traders, they'll find success kind of right away because they kind of like think differently. Like I met the trader the other day with El Chapo. He was a newer trader. He's been around for kind of a minute, in the game, but started trading futures, kind of found his one setup. He focuses on that. He trades it every day the same way. He doesn't do anything else, wakes up, trades it, goes back to bed, whatever it is. So every trader kind of will go through different different path through this whole thing. And like I said, there's not like a moment where you're going to wake up and be like, oh my God, you know, I've really arrived. Like we really have arrived at this, you know, train station of profitability, because, you know, like I said, you can have an entire month of profitable trades and then you can lose it all in one day. So I don't know. I think the best thing to do is to not worry about like, hey, oh my God, you know, I'm a profitable trader, but more focus on like, hey, just focus on continuous, you know, showing up, taking those red days when you get them, taking the green days, your green, your red, whatever it is, kind of walking away and having the same feeling every day. Every day there's new opportunities. Every day we have a chance to make a little bit of money. Every day we have a chance to have a red day. But also, as long as we follow our rules, we follow the plan, you know, in the long term, you know, we should be okay. So I think that's kind of the best way to look at it. What are the main changes you applied recently on the orb strategy? Nothing new, really. I mean, I kind of mess around with like maybe different theories on, you know, the trades. I think the one thing that I've really noticed lately with the market, the way it's been trading, is, you know, being very careful. You know, don't be all crazy and trying to get into every little move in that 15-minute range. I think you got to really let the market, like, don't just jump in, you know, right when we break out or we break down. Like you can see on Friday, we broke the 15-minute range to the downside, then ripped right back up. This is actually the 2-minute chart. It might be a little different. Yeah, so like we broke the 15-minute range to the downside, and we then ripped straight back up. So I think it's a good rule to be like, hey, be patient. Don't just jump in on the first little candle that breaks the downside. You know, best case scenario, it's like this. You know, you really kind of want that breakdown to push back up, build out a flag, and then like that's where you might take a trade at. Whereas like on Friday, you can see we broke there. We pushed back up to the middle, kind of like, oh, is that a bear flag? No, that's like a higher low. So that's one thing you have to remind yourself is, you know, a bear flag, in theory, like it can look like a bear flag. That can also be turning into kind of a higher low, like right there. So I think that's one thing that I've kind of worked on with the 15-minute range, like not being too quick to enter. You can see even for the break to the upside, we broke the upside move, but you can see how we kind of consolidated at the high of that 15-minute range, and then we broke out, but we still pulled back. We pushed, we pulled back. I mean, we basically chopped that 15-minute range for about an hour and a half before like making a move up there on Friday. So patience is probably the one thing that you can really focus on with the opening range breakout. You know, it's nice because it kind of forces you to wait for that 15-minute range to set up, and then kind of waits like, okay, 10 o'clock, let's see what the news is. Patience. And some of the best trades really just come from sitting back, waiting, and then really waiting for like that very obvious setup. You're like, hey, you know, now that we trapped to the downside, if we break out to the upside, you know, we'll get some momentum and kind of just being very patient, right? That's kind of the biggest change that I've forced myself to do with the 15-minute opening range lately. The next question here. Do I need a laptop to trade? If so, what laptop? Well, you could, I mean, any laptop, basically, you could trade on your phone. I guess you don't really need a laptop. I don't know. You can do whatever computer you want. If it's got internet access, you can kind of make money and get it in. What do I think about a negative R&R, risk to reward? I trade with about a 1 and about an 85% win rate. I mean, it works, right? It'll work. You can have a negative risk to reward as long as your win rate's high, and as long as you cut off your losers and you focus on just, you know, managing that risk. Every strategy will work, right? Every strategy works if it's, well, maybe not every strategy, but most strategies will work if you follow the plan, right? Will you make sure that you're negative, 1 to 0.5, will you make sure that you follow that plan no matter what? Well, that's the question. Because if you get into a big trade and you end up letting that loser turn into a 4 to 1 risk to reward or whatever, that's gonna really mess you up in the long term. But if you can do it consistently and cut off your losers, keep your losers small, and keep that win rate high, well, it'll work. And yeah, who am I to tell you that your strategy can't work and all that? How many contracts do you normally trade on a 50K account? I mean, you really only need one contract, maybe even like trade 5 micros. Nothing wrong with trading the micros on a 50K account when you're first starting out. But yeah, 1 mini max maybe. You don't need to go crazy. You don't need to put on big size. It's a 50K account. You don't need to make $10,000 to get a payout. So yeah, keep it small, man. Focus on getting bigger moves in the market with smaller size compared to trying to get in with big size with smaller moves is definitely a strategy that'll help you consistently, like, you know, stay in the game longer and also learn, right? If you're just getting in with big size and then getting out quickly and then getting in, getting out and doing that over and over, you're probably not really like taking actual good setups. You're probably just like trading every little move in the market. And that can be obviously very difficult to do that consistently. So trade small size when you first start out. Micros are totally fine. Trade 1 mini, 5 micros, 1 micro, whatever you want, and really focus on like nailing those setups, doing that consistently for a longer period of time versus just trying to put on big size and take 5 points. I think that's your biggest play there. You're very good at understanding when to trade and when to stay out of. What are your confluences? Like I said, I mean, if the market's chopping, if we're in a range, it's pretty obvious. Look at the bigger time frames. You know, look at the hourly chart. Like if you look at the hourly chart and all those candles are just kind of lapping up and looking all weird and funky, you know, well, then it might be kind of a good time to stay out of it. Like you can see like here when all these candles are just basically like inside of each other, like wicking, doing all kinds of weird stuff. Just stay out of it. Wait for the bigger time frame to really kind of be like, hey, you know, look, ding, 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 ding. We're pushing. There's a trend. There's an obvious trend. If the bigger time frame does not have an obvious trend, right, then it's probably chop. It's probably a good time to stay out of it. Don't trade momentum if there is no momentum. If you're going to be a momentum trader, you got to trade when there's momentum, right? Trading in the middle of the day, trading at the middle of the night, whatever it is, like those are not momentum hours. So focus on really waiting for momentum, waiting for that like move where you're like, I can get in, I can get out, I can lock in that profit, I can make some quick and easy money. And that's really what I want to focus on. That's kind of what I focus on. That's the understanding that, hey, the market is not always going up and going down. A lot of times the market is going sideways. And we have plenty of days where you have an entire day where the market just goes absolutely sideways, right? Like that, it's, yeah. I mean, that does happen more often than not. So being aware that if the market's not moving, I'm not trading, right? If it ain't moving, I don't want to trade it. So just be aware, you know, look at like, it's not obvious, but it's also, hey, you know, hey, the trend, where's the trend going? Well, we're stuck in the 15-minute range. Okay, let me avoid that, right? Like, do we have an obvious target? That's a good way to look at it too. Like, do we have an obvious target? If we start to break out to the upside, like where is the obvious target for the market to move? You know, have we broken above the overnight high? That's kind of like my idea. Like, okay, overnight high is right there. So if we break out through here, like I'm targeting that overnight high. If I don't have a target, if I don't think there's like an obvious target for the market, well, then I'm maybe like, I'm going to stay out of it because, well, if the market does break out, it probably won't give me what I'm looking for anyway. Can you please talk about prior resistance turn support at EMA? Prior resistance turning to support at EMA. Yeah, I mean, what do I say about it? Previous support turning into resistance obviously is bullish, you know, right? So especially with like the opening range. Perfect example there on Friday. We got resistance, got some support down there. Obviously the channel, the opening range. What happens when we break above it? We break above it. It turns into support, the previous area of resistance there with the opening range high. And that's what I'm looking to get in. Especially as we break out to the upside, we get back above the EMAs there. We pull back into the EMAs, and then we moved higher. So from the 120s up there to the 170s, just being patient. Letting, like I said, that obvious thing, like, oh, look, wow, we just ramped. We went right through that resistance there. What does that mean now? Like, what do we want to do? Okay, we want to be patient. And then we look for our like kind of pullback, and then there's that setup. So Previous resistance turning into support, always a good thing. Previous support turning into resistance for a bearish idea, also another strategy as well. So support, resistance, previous levels, when they break, when they don't break, and all that stuff. Someone says, why do I no longer use the Bookmap? I've talked about this before. It's not that I have anything against Bookmap. I just think that for me personally, I don't really need all of the info that's out there in the world. Try to keep it a little bit simpler. And yeah, I don't know. It's just kind of a personal thing. I kind of felt like it was too much, right? Like I had too much like overwhelming just like info in front of me. Like I'm trading and I'm like, oh, look the Bookmap. Oh, look at the indicators. Oh, look at this. Look at this. And it's like too much. And then I'm like, I'm going to just maybe kind of slim it down, kind of reduce what I'm looking at and see if that helps, which it did. Because when I was in Hawaii, I kind of made things simpler and I felt like my trading got better. So that's why I don't have Bookmap. I still look at level 2. I'll still be like, hey, there's a big buyer, there's a big seller. And just trying to kind of reduce some of the information that I'm looking at kind of every day. So good way to look at it. Can you speak to the concepts of trading two profit firms, maxed out accounts, free profit or trading accounts? The question is, who is the biggest, the largest trader who trades the most accounts? I don't know what that means. I'm the biggest. I'm the largest. I mean, you can trade with as many prop firms as you want. Copy trade them all you want. Yeah, I don't know. How to unlock the PW cash cow mentality. I don't know. I don't know if there's a simple way to explain that. That's like a 20-hour video. I think for me, I've just never really like focused on the money, if that makes sense. I've just focused on like doing what I wanted to do through life and kind of let the money come, let it be secondary. Like I came from nothing, so if I lose everything, I kind of will be okay as well. Might be kind of a way to look at it for me. I don't know. I think I've built everything and got to where I'm at because of all the work and effort that I put into it. So now I get to reap the reward, which is the money, right? There's been plenty of times in my life where I didn't have the money, and now, well, I have the money. So I'm happy. I'm back. I'm in it. And that's kind of just the thought process. I don't know about cash cow, but put in the work, man. Put in the work, put in the effort. Especially with trading. Trading is one of those things where like you just got to put in the time. It's not so much like put in effort. I don't think you need to like put in a ton of effort, but you got to put in time, right? You got to like see the charts every day. You got to trade consistently for a while before you kind of figure it out. And a lot of traders, they want that secret, but there isn't a secret. Every trader is a little different. Every trader has a different path. Every trader's got a different story because we're all from like different lives, different places, different mental kind of outlooks and ideas of money. Some people, they can't trade because they can't understand the idea of like losing money, right? They can't to them, it's like if they lose money, they feel like they've lost it all. But with trading, it's like you got to lose money sometimes. You got to cut off a loser. You can't hope and pray. You can't hold on to a position forever. You got to get out. You got to get in. And that's kind of just that mentality of money is a tool. Maybe that's the way to put it. Money is a tool. Use money to make more money. And then when you're not making money and you're losing money, cut it off. Whatever the issue is, if you got a problem in life, if you're losing money because of your, gambling addiction or whatever stupid, I don't know, just whatever your problem is, cut it off. Get rid of it. Because if it ain't, putting money in your bank account, then maybe it's time to forget about it. Kind of a long-winded answer to that, but that's kind of there. So, what time frames do you have open at the same time? I've got the 2-minute chart. I've got the 5-minute chart. I got the hourly, the 15, and that's kind of my go-to setups. 5-minute, 2-minute, 15, and then the hourly to see kind of the bigger time frames of what I'm looking at and all that. Explanation of how you would trade a 50K account, like how to size properly and the importance of risk management. Yeah, like I said earlier, trade small size, build it up, get consistent, get those $500 days, get the $100 days, whatever it is. Do that consistently. Build that account up. Give yourself some cushion. Get over the trailing drawdown. It's not a race, $100, $200 a day. It will add up. You make $200 a day for 30 days. Well, there you go. You got $6,000 in profit. You get your fucking payout, and then you walk away happy. I think It's very easy to get greedy and want to make more and more and more, but the more and more that you get greedy, the more and more you're going to end up blowing up your account. So when you first start out in the 50K account, just take it slow. Take the best setups and then walk away. $500, $200, $100 a day. I mean, that's all you need. You do not need to go for $5,000 days every single day, especially when you're first starting out, It's easier to be consistent with smaller loss days and smaller win days. I know that sounds weird, but trying to limit your thought of man, I got to make, so much money in one day. You don't. You got to just be patient and kind of wait. And it's also a thing of staying alive, right? There's days where the market's going to go sideways. There's days where the market's going to chop. And those are the days where you don't want to be going crazy. Those are the days where you don't want to be, getting all wild and crazy. So, yeah, avoid the wild and crazy days. And just kind of, no matter what, if you have a red day, if you have a green day, you should kind of walk away with that same feeling of hey, I did my job. As much as the red days hurt, mentally or just kind of emotionally, you're damn it, I had a red day. The best thing to do is be able to walk away and not have any type of feeling about it, right? Either green or red, you walk away because you did the job. You followed your plan. If you're walking away and you're very emotional and you're very upset because you had a red day, well, it's probably because you were trading emotionally, probably because you weren't cutting off your losers. You were hoping, you were praying, you were over leveraging, whatever it is. I guarantee there was something that you did, emotionally that day. If you're walking away with a lot of emotions after having a red day, well, that's probably because you were trading with a lot of emotions. How to not go until and survive another day. I feel like I just kind of answered that as well. But yeah, like I said, consistency. Having a max loss, having, kind of a plan of hey, if I'm down $100 on the day, I'm walking away. If I'm down $200, if I take 2 losing trades right away, well, then I walk away. If I'm taking good trades and the market's hot and I'm getting good reads, well, then I continue on. I keep the party going. What are the best tips or takes on risk management? I kind of already answered that a lot throughout this video, but again, consistency, being consistent with your losers, being consistent with your winners, right? If you have a $1,000 winner and then you have a $500 loss, perfect. Consistently. Do it consistently and you will make money consistently. But you won't make money by having a $10,000 loss and then a $100 winner. It's not going to be profitable, right? You're not going to be profitable. So you got to be consistent. Be consistent with your losers. Be consistent with your winners. Consistency is the name of the game. Oh, how would you grow a small account of $250? I wouldn't. Maybe if you trade one micro contract, it's going to be very, very difficult. Good luck with that. I don't know. It's hard. I would work on maybe just building or working harder, get a second job. I don't know. That's a difficult one. Trading is not a way to get rich if you're poor, if that makes sense, right? You should be able to figure out how to make extra money to fund your trading account and also pay your bills. It's like a life management, right? Trading is kind of like life management. You should be, kind of in a better, in a decent place, right? If you're starting out trading, you should not try to trade when you're in massive debt. You shouldn't try to trade if you have no money. You shouldn't try to trade if you have no job. The best traders are always the ones who they're not trying to pay off all their debt. They're not trying to, pay their rent. They're not trying to pay for food to eat. They have a job already. They already have a little bit of money saved up. They're trading just to kind of grow that and learn and build a tool or a way to do that. How long have you been trading NASDAQ? What is it? Probably 4 years now? 4 or 5 years. Probably about 4 years. Is there always a minimum 10-point move on the ES and 150-point move on the ES? I don't know about minimum, but there's money to be made pretty much every day. What are your go-to confluences or indicator behaviors that gain extra significance when you see on a tick chart instead of on a standard time frame? I don't really trade on tick charts, so can't really tell you, but like I said, if the EMAs are going sideways, they're chopping. If the market's not moving, if we're in a range, that's probably a pretty good confluence to not get into a trade. Apex accounts with tough trailing drawdown. How do you trade and manage to aim for bigger payouts? Well, like I said, it's consistency, right? If you trade a 50K account with Apex and you make $500 a day for 10 days, that's $5,000. And then you request a payout, and then you do it again. You might have a red day here and there, but like, hey, those $200, $500 days, they do add up. You don't need to get, $10,000 for that first payout. Just aim for that minimum, right? Whatever your minimum that you need to get a payout for whatever account size you're trading, just aim for that. Don't aim for like, hey, I want to make $100,000 in this account and then I'm going to get a payout. Like, maybe not the best plan. All right. How do you train your psychology? Well, I think we already know that and got that one figured out. So that, again, the secret here, my friends, is consistency. The biggest problem for most new traders is they want to do it quickly. They want to do it fast, but trading is not going to happen quick and it's not going to happen fast. So try to avoid basically putting a timeline on your profit target or putting a timeline on your profitability and all that stuff. Like, just focus on trading. Don't worry about that profit target in your eval. Don't worry about, that profit target in your funded account. Just trade. Don't worry about the P&L. Focus on managing your risk. At the end of the day, traders are risk managers. We're managing risk. If we put on a trade and we're risking $500, we want to make $3,000. Perfect. Okay, I'm going to manage that. But I'm not like, oh my God, all I'm worried about is making $3,000 a day. I'm like, no. All I'm worried about is managing my $500 risk. I'm managing my drawdown. I'm managing my P&L. I'm managing my risk. Sorry, not my P&L. I'm managing risk. That's all it is. It's basically trying to stop yourself from losing money, locking in that profit, and then walking away. And doing that every single day. So there it is. Trying to answer some questions for you guys. I'll try to do this more often. If you guys got more questions in the future, I'll put up a post every week and you guys can let me know. There it is. We got some big stuff going on this week at the BDH. We got some new guests. We got some more traders coming in. And I'm sure there'll be a lot of action in the markets. So if you guys haven't already hit that like button, subscribe button, you know what to do. Make sure you tune in 9 a.m. Also check out onlypropfirms.com every morning. If you haven't already, pull it up there, put it on the chart. You got the economic calendar down there. You see what the news is. On May 5th, we got the S&P Global Manufacturing. Got some numbers there next week. So there it is. Check it out, onlypropfirms.com. Thanks for watching. I'll see you guys later on.